Inflation is said to have passed its peak, so is that good news for those of us with a mortgage? Does it mean interest rates will remain steady? Property Apprentice owner and financial advisor Debbie Roberts is with us this morning. Good morning, Debbie.
Good morning.
Tell us, because the Westpac, some of the banks are talking about the Reserve Bank still, increasing, right? We're expecting more of an OCR increase. Does that mean we're going to see changes to our banking mortgage rates?
Not necessarily, because I think the markets have already factored in where interest rates are heading, and the banks seem to be expecting interest rates to come down. So, yeah, I think there's a pretty good chance that the Reserve Bank will increase the OCR to 5.5, so that'll be an increase of 0.25. There's like half of the country's mortgages are going to be coming off a fixed rate this year. So that's like half of homeowners who haven't yet felt that pain in their living expenses, with the increase in mortgages, because, they could be facing twice the mortgage payments of what they've been used to. So I think the Reserve Bank's probably done enough to bring inflation down, but in the same breath, they'd probably rather overshoot than undershoot.
Yeah, it's a hard line because you've got a potential recession on one hand and then you've got continued and persistent inflation on the other, which no one wants to see.
Yeah, although the Reserve Bank have said that, they are engineering a recession.
Yeah.
So, yeah, but I think, long story short, my thoughts on this are that it's going to have a little bit of an impact on the property market. Banks will keep their test rates high. They won't necessarily increase their interest rates, but interest rates and savings will increase. So, that's what the Reserve Bank's trying to do, is stop people from spending so much. So, yeah, it'll keep a bit of a lid on the housing market because it'll still be reasonably tough to get lending, although bank lending criteria is starting to relax a little bit, which is good news. And we could see a drop in the loan-to-value restrictions, the deposit restrictions as well.
Have you seen or have you noticed an increase in people coming to you now that those rules are being relaxed a little bit, saying, hey, can I get some advice on this? When, how should I think about this? How should I interpret these changes?
Yep, so I would say from February, we've seen a weekly increase in the number of people that attend our free training sessions. So that indicates to us that the general public is starting to think that, even if they're not ready to buy now, they should at least get educated about it. I honestly think there's a really good chance we're already past the bottom of the property cycle. We've seen median house prices across the country increasing since the end of February. We've got immigrations on the increase. We've got construction levels are down. Good chance we're past the peak as far as interest rates go. I think by the time the general public realise that we're past the bottom, it probably happened 3 to 6 months ago.
It's always the way, isn't it? It's interesting you mentioned migration, because Westpac came out this week and they said one of the reasons they see the potential for a further increase to the OCR is that immigration coming in. And of course, immigrants come in and they lower the cost of wages, but they push up the price, the cost and the price of rentals and housing.
Absolutely. They put pressure on the housing market. So, when immigrants come to New Zealand, most of them settle in Auckland first, so it is going to have an impact on the Auckland rental market first and foremost. And then eventually a lot of migrants buy property, so that'll put further pressure on the property market. The housing market doesn't necessarily track the same rate as inflation does.
Yeah.
All of these extra people coming to you, are they first home buyers? Are they investors? Are they people wanting to upgrade? Who are they?
We've got a range of people. Like most of the people that want to learn about property or property investing are either in the market to buy their first home or in the market to buy rental properties, and they just want to learn how the rules have changed. But yeah, as far as buyers in the market at the moment, it's about 50% first home buyers and movers, people upgrading their homes or downsizing. So that's 50% of the buyers in the market at the moment are emotional buyers. Investors buy based on the numbers. So if anything, we push prices down. It's the emotional buyers that push prices up, and they are making up half the market at the moment.
Yeah, true. Debbie, thanks for coming in this morning.
Welcome.
Good to see you as always. 11 away from 9, Property Apprentice owner and financial advisor Debbie Roberts here on AM this morning.